Today's financial market update, the most important market insights you need to know. Market sentiment is bearish, mild. Market is declining across major indices. Index performance: S&P 500 at -0.46%, Dow Jones at 1.07%, Nasdaq at -0.32%, Russell 2000 at -1.72%. The overall market sentiment remains neutral, with noticeable variances among different sectors influencing investor behavior. The mixed market sentiment indicates that while some sectors are thriving, others are struggling, suggesting a selective investment approach is necessary. Consider allocating funds to tech-focused companies like RSVRW, which are likely to continue benefiting from investor enthusiasm and market advancements. Wells Fargo shares fell by 6.6% following exposure to Market Financial Solutions, which is facing a $930 million collateral shortfall. The decline in Wells Fargo's stock illustrates growing investor anxiety about the broader implications of inflation on financial stability. Consider diversifying your portfolio by investing in financial institutions with strong balance sheets and minimal exposure to high-risk assets. Rockwell Automation reported an EPS and revenue that exceeded expectations, resulting in a 15% increase in share price. The strong earnings from companies like Rockwell Automation indicate robust demand in their sectors, signaling potential growth opportunities for investors. Consider adding shares of Rockwell Automation to portfolios to capitalize on its recent earnings momentum and growth potential. Consumer confidence has shown signs of wavering, leading to a notable increase in savings rates among households. The shift towards saving over spending suggests consumers are becoming more risk-averse, which could slow down retail sector growth in the coming months. Consider diversifying your portfolio with defensive stocks and sectors that typically perform well during economic uncertainty and rising inflation. The effective federal funds rate fell from 4.33% in early 2025 to 3.64% in early 2026. Lower federal funds rates typically enhance lending conditions, making it cheaper for consumers and businesses to borrow money. Consider increasing exposure to real estate investment trusts, REITs, which often benefit from lower interest rates and increased borrowing. Recent data shows that inflation rates are rising, with wholesale prices increasing by 5.5% year-over-year in September 2023. Rising wholesale inflation may lead central banks to adopt tighter monetary policies, which could increase interest rates and impact borrowing costs. Consider diversifying portfolios by including emerging market bonds, particularly those from India, to capitalize on growth amid domestic inflation. Emerging markets have seen a surge in investments reaching record highs, driven by global asset managers seeking growth opportunities. The influx of capital into emerging markets signals robust investor confidence, potentially leading to sustained economic growth in these regions. Consider reallocating a portion of your portfolio to emerging market equities or ETFs to capitalize on their growth potential. U.S. support for Israel is decreasing, with recent polls indicating a significant drop in public sympathy among American voters. The decline in U.S. support for Israel could lead to instability in the Middle East, affecting oil prices and global energy markets. Consider diversifying portfolios by investing in energy stocks, as geopolitical instability often leads to increased volatility in oil prices. United Airlines shares dropped 8.4%, reflecting heightened concerns over rising jet fuel costs due to climbing crude oil prices. The decline in United Airlines stock signals investor anxiety over rising operational expenses, particularly in the airline sector, due to increasing fuel prices. Consider diversifying portfolios by reducing exposure to airline stocks like United Airlines while monitoring fuel price trends for better entry points. China's retail sales rose by 5.5% in the last quarter, indicating a growing consumer market despite saving trends. The shift towards saving over spending suggests consumers are prioritizing financial security, which may lead to reduced demand for global brands. Consider diversifying portfolios with Chinese stocks, particularly those resilient to domestic consumer spending trends, to capture potential growth. American Missouri successfully issued $891.1 million in first mortgage bonds with rates of 4.88% due 2036 and 5.5% due 2056. The significant bond issuances reflect heightened investor demand for fixed income as a protective measure against inflation and economic instability. Consider diversifying into high-quality bonds like American Missouri's offerings to capture stable yields while hedging against inflationary pressures. Freddie Mac's chief economist predicts a significant rise in buyer activity as interest rates drop below 4% this spring. A decrease in interest rates typically indicates a more favorable borrowing environment, encouraging new home buyers to enter the market. Consider diversifying your portfolio by allocating more funds towards residential properties, especially in areas with high demand and low inventory. OpenAI's valuation surged to $730 billion, marking a significant milestone in AI investment interest and market dynamics. The inflated valuations in the tech sector suggest that investors may be overly optimistic, leading to a potential market correction. Consider diversifying portfolios by incorporating stable sectors like healthcare or utilities, which may offer resilience against tech volatility. Think Surgical has successfully completed initial surgeries using its knee robot, enhancing knee replacement options for patients and surgeons alike. The completion of surgeries with the knee robot indicates the growing role of AI in healthcare, suggesting potential long-term investments in medical technology. Consider investing in companies like Think Surgical as the healthcare sector increasingly adopts AI technologies, presenting opportunities for growth. OpenAI's valuation has skyrocketed to $730 billion, showcasing the rapid growth in the AI sector. The dramatic increase in OpenAI's valuation suggests a strong appetite for technology investments, which may trickle down to crypto assets. Consider allocating a portion of your portfolio to tech-focused funds that also have exposure to AI and crypto assets. NextEra Energy successfully raised €1.75 billion through junior subordinated debentures to fund its expansion efforts. The significant capital raised by NextEra Energy indicates strong investor confidence, reinforcing the potential growth within the renewable energy sector. Consider investing in NextEra Energy as it positions itself for long-term growth in the renewable energy landscape. Thank you for watching. FERPA, your financial Sherpa.